Imagine waking up and opening WhatsApp. Someone says buy Reliance. On Twitter, the trend is that markets will crash. On TV, the anchor screams, PSU banks will fly today. Whom do you believe? This is the problem of market noise: too much information, little clarity. Many traders mistake noise for signal. Any random news or social media post influences their trading decisions. Result: overtrading, impulsive entries, and losses. Noise is always loud, but not always useful. It distracts you from your real trading plan.
Over 93% of traders lose money in the markets, not because of the market, but because of their mindset. Hi, I'm GC Sharma, founder of Ghar Ghar Investor, former head of financial education at the National Stock Exchange. After 3 decades in the markets, I'm here to help you trade with discipline, not emotion. Welcome to Bounce Back Trader, India's free YouTube learning series for traders who want to bounce back with clarity and confidence.
SEBI surveys show that more than 80% of retail traders base their trades on tips. Advice from friends or TV anchors. Most of them lose consistently. Another study found that traders who stick to their own plan without external noise enjoy 25 to 30% higher win rates. Global example: the meme stock saga, GameStop, AMC, showed how dangerous hype can be. Those who bought due to FOMO lost half their capital. Noise also creates decision fatigue. When you hear multiple contradictory signals, your brain gets tired and makes impulsive choices. Neuroscience confirms that exposure to high noise increases cortisol, stress hormone, by up to 30%, directly damaging performance. Miller's law says the human brain can effectively process only about 7 chunks of information at once. When trading is bombarded with 50 signals from TV, Telegram, and Twitter simultaneously, the brain gets overloaded and clarity disappears. SEBI enforcement cases show that pump and dump operators exploit noise, creating hype first, then exiting, leaving retail investors trapped. 1. FOMO, fear of missing out on profit. 2. Lack of confidence, no trust in one's own plan. 3. Herd mentality, if everyone is doing it, I should too. 4. Instant dopamine, new tips feel exciting even if they don't work. Arjun saw on Twitter that a stock would be the next multi-bagger. He bought without analysis and lost 40% in a month. Neha ignored noise and followed only her plan. She focused on one stock, executed her strategy, and booked profit. Meera, active in WhatsApp groups, traded on tips daily. Within 3 months, she lost 60% of her capital. Then she muted the groups and decided to stick to her routine. Suresh, an IT professional, followed TV anchors' buy calls. When he reviewed his journal, he discovered 70% of his losses were due to TV tips. He reduced screen time by 50% and read only trusted sources. Result: his performance improved steadily. Ravi, a young trader, lived off Telegram tips. At first, it felt exciting, but within 6 months his account was wiped out. Kavita, a retired teacher, watched financial news daily. The constant flood of updates increased her anxiety and led to poor trades. When she switched to focusing only on her journal and one research portal, her stress decreased and her returns stabilized. Global example: crypto hype, Dogecoin, Shiba Inu, driven by Elon Musk tweets. Investors who jumped in blindly lost heavily, while disciplined traders survived by controlling risk. Filtering noise is one of a trader's biggest skills. Just like static on a radio station, markets have a lot of static. You must tune in to the real signal. Signal always comes from your plan, journal, and analysis. Ignoring noise means conserving your energy. A simple rule: plan before market. Execute during, review after. In this cycle, there's no room for external noise. Analogy: a pilot flying a plane doesn't listen to passenger chatter. He only trusts his instrument panel. Traders must do the same. The lesson is simple: ignoring noise is a survival skill. Action steps: 1. Mute or exit all tips-based WhatsApp groups. 2. Create one trusted information source and follow only that. 3. After every trade, write in your journal, was this my plan or noise influence? Daily ritual: before market open, write, I will follow my plan, I will ignore noise. Motivational analogy: the market is like a bazaar. Everyone shouts to sell their product, but the successful buyer follows only their shopping list. Another analogy: the market is like an ocean with constant waves. Noise is those waves. The trader is the surfer, their victory lies in balancing and not losing direction amidst the waves. Noise filter checklist: before every trade ask, is this decision from my plan or from noise? If it's noise, avoid the trade.
You've just completed another lesson of Bounce Back Trader. Remember, trade with discipline, not emotion. Subscribe to the channel, share your thoughts in the comments, and continue your journey in the next video. Let's change that 93% story.